Well, Zahra, welcome to our NFP updates. Yeah, while the geopolitical tensions still continues, and that's getting a little bit even higher as the geopolitical tensions between Netanyahu and the United States talking with Mr. Trump, and sounds like they are concluding some attack, finally taking military action against Islamic Republic based in Iran. That's why you can see the oil prices reaching higher. However, at the market, we have the NFP numbers. There are some changes in it. Changes also we saw in reporting. So we can see right now in this report. However, the total earnings, total result of the NFP general overall data that we had earlier today from NFP, we had very positive and good numbers. You can see here unemployment rate is to 4.3%, dropped to 4.3% with 130,000 created job overall. Just in the private sector, we have 172,000 newly created job. That's amazing. That's amazing number. And the government created job fell by 42,000, but private sector increased by 172,000 newly created job. Average earnings on a monthly base increased by 0.4%, much more than 0.1% that we had previous month in December. And you can see on the annual base, it's increased by 3.7%. That's also another positive number from the labor market. Average weekly hours also increased to 34.3 hours. And manufacturing payrolls increased by 5,000. Almost all the numbers that we had, excluding participant rate, it was excluding, sorry, the government payrolls, all they were better. About the payroll benchmark, and you can see that the payroll benchmark and the payroll benchmark non-seasonal adjusted since 2025. You can see that the market labor numbers fell by 180, about 862,000 compared with the previous year. I mean, the labor market, we have less workers right now. It's because of changes that we have. I don't think anything negative there, because it comes mostly because of the changes that we have in the market. We have more, first of all, that's a non-seasonal adjusted number. On the other hand, we have more, just like for now, if you look at the previous, like years ago, until present, where we have too much more. We have many people that are working from home, that they are not applied or employed in any companies, and the overall setting of the labor market is changing. That's why the several times I told we should give new ways of the counting of a labor. I mean, the talking about the labor market and the counting unemployment rate. That's the versions that these versions that we have. They are very old version. We cannot count too much on them. That's why I think that for the labor market, the most important numbers that you should watch, or I do watch, is the applications that they are filling for to receive the unemployment benefits. So if we have less unemployment benefit, if we have less people looking for a job, it means that the labor market is fine. And you can see here the unemployment rate also is at 4.3%. Even last month that we had less than 30,000 newly created job, we had a 4.4% as unemployment rate. That's why the definition of the being employed or not being employed is a little bit changed and is totally different with what we can see. We could see before. That's why looking at the market reaction, you can see at the very first reaction now, the percentage of the possibility of a rate cut in next meeting is fell much lower to 6%. You could see that 2 weeks ago at 10%. Last week it increased towards 22%, and now you can see it's falling down to about 6%. So there is a more than 94% chance for holding the current rate in the next meeting, which is a very good number, which is a very good I mean, the good news for the labor market and the good news somehow for the market as well. I'm saying the good news somehow for the market as well because the market finally knows what exactly is going on right now. You know what I mean? Like there is no doubt whether the Fed will cut the rate or not. There is no doubt already about that. That's why you can see the market risk is falling down. The market risk is because the volatility is lowering. I mean, they are not, there is no doubt that whether the Fed will cut the rate or not. That's why you can see that here the uncertainty down around 18 for the market risk. That hold these I mean these numbers means that the central bank or the bank of or the Federal Reserve in the United States can stay higher for longer until they can see that I mean that you know these numbers says that the the US economy and the US labor market can handle this higher rates. So if they can handle the economy can handle this higher rates and there's still the inflation is much higher than the central bank target above 2.5%. That's why above 2 around 2.5% above central bank's 2%. That's why the higher for longer can be the most expected scenario. So you can see that the US dollar index to you can expect the US dollar index to increase. However, we will have the inflation numbers later this week on Friday. That can also we will talk about that later as well. We will compare, we will put these numbers together and see what's going on. But generally, that's what is happening so far for now. Looking at the gold and the silver market, you can see that the gold and silver in the very first reaction because of both of them, because of the stronger US dollar, they slightly eased the price dropped. But generally, these numbers higher for longer is in line, it's in favor of the safe havens because these numbers will put the pressure on the stock markets. Even though the stock markets, if you look at the main index like S&P 500, Dow Jones, and the Nasdaq, even if they had a positive reaction at the very beginning, these higher for longer is not a good for them. So that's why you can see step by step these numbers, these stocks to slightly ease. Even though if because of the earnings report they gain some, but these numbers are not in favor for the stock markets. So stock market reaction should be negative for that by slightly time passing. Same for the cryptocurrency market. I don't expect any positive reaction with these numbers for the cryptocurrency market. That's why again you can see this money flow from the stock market for the crypto markets can go towards the gold and US dollar. So these numbers are positive for both gold and US dollar. On the energy market, oil market, oil price is not following the economic data so far these days because if you look at the economic data, if you check the energy reports, energy market reports, you can expect a $55, $56 for oil right now, but higher prices, it means that right now you can see that above 65 and $65.60. That means the oil is following the geopolitical news, not the economic data. That was what happened in the data, positive earnings, positive labor data, which is positive for the gold and the US dollar index, and negative for the stock markets and crypto, and for the oil, follow the geopolitical news. Hope it was useful for you. Talk to you again soon. Have a good day. Bye-bye.